talk about going into a country like Mexico because of the cartel and using it as an excuse to take over their silver mines or their silver production, it seems like a stretch.
Basic supply question. If we have this violence and we have this chaos, and we have seen the cartels take violent action against some silver miners in the past, what would that mean for near-term prices?
I would say that the inordinately large deliveries between 30 and 70 million ounces every month is partially the U.S. government, who is pulling 38 million ounces out. Where's it going? Could it be Samsung and Sony and Tesla? Sure it could. But
we are going to have this Vault project, a strategic mineral reserve.
I mean, what more do you need to hear? And if you ask yourself, who the hell has the power to make the CME Group do this? You know, how much further do you have to look? The CME Group always finds a way to draw down open interest into the delivery month so that it does not exceed what can be delivered. And they did it, but at what cost?
Vital for defense, AI, economy, and
well, in that
electrification.
$1.5 trillion defense bill, is there anything in there for getting minerals critically?
What's happening in Mexico, which is the world's largest producer of silver, and Mexico is facing a surge in cartel violence. Security forces killed a big drug cartel leader known as El Mencho. He's the longtime leader of the CJNG gang. Now, rather than calming the situation, this death has in fact triggered retaliatory attacks, more violence, more chaos, more instability that's spilling into key economic sectors, transportation, mining, raising concerns about security, investment risks, supply chain disruption. And again, Mexico is the world's largest producer of silver. Silver, of course, as we mentioned, has recently been added to the critical minerals list. Mexico produces a quarter of the world's silver supply, much more than China, much more than Peru. And so the question this raises, and there are several questions, but let's start off with a basic supply question. If we have this violence and we have this chaos, and we have seen the cartels take violent action against some silver miners in the past, do you foresee a disruption in terms of mining, in terms of supply? And if so, what would that mean for near-term prices? Let's start with that.
Well, I think absolutely you would have some form of disruption. I think if you're a board member watching what happened, I think it was Visalia, if I'm not mistaken, where 10 of their board members were kidnapped and murdered recently. And now you see this, where the majority of these mines are in Mexico, and at what point do you start to question the wisdom of that?
A cartel leader's death isn't stabilizing Mexico's silver production. It's amplifying systemic risk. As Andy Schectman points out here, retaliatory attacks threaten critical mining hubs, potentially disrupting a quarter of global silver supply and affecting logistics and investment security. Headlines rarely address this operational fragility, and board-level crises, like the Visalia kidnapping, reveal hidden vulnerabilities in multinational operations. Investors should weigh not just output, but the broader risk to supply chains and corporate governance. Next, Andy Schectman discusses how this instability could impact near-term silver prices and strategic investor decisions.
There's always been the overhanging threat in any mining endeavor of geopolitical risk. This takes it to a whole new level, and I think it would have a profound impact, 100%, at least until things get under control.
How quickly, well, what would the timeline be for this supply issue to start being seen in the prices, do you think?
You would think it would be immediately. If indeed they have if this massively disrupts the supply chains in Mexico. You know, you hear that rumor of Samsung flew to Mexico to open up a mine for all of their doré and concentrate in order to, facilitate their battery operations. What does it do to a company like that? Do they rethink their problem? Are they some of the ones that are pulling the metal off of the exchange because of what they saw? This is a situation where it becomes even more imperative for the U.S. to do things like classify silver as critical, because supply chains are being disrupted. And not only that, the exchanges by which these commodities are freely traded seem to be less than sincere. And when you realize we're now in the 6th year of a supply-demand imbalance into the billions of ounces cumulatively, 200-300 million ounces a year, this becomes a real problem when you are putting a big question mark in front of the very largest producer of silver in the world. Yeah, it has to have a problem or some sort of an effect.
Supply chain threats in Mexico are underreported despite glaring market consequences. As Andy Schectman points out here, a 6-year deficit of 230 million ounces annually amplifies the risk from operational disruption and off-exchange allocations. Rumors about corporate moves like Samsung's mine are just the tip of the iceberg. Exchanges fail to reflect true scarcity. For investors, this means a hidden layer of exposure in both physical supply and price volatility. Next, Andy Schectman talks about the broader implications for U.S. critical minerals strategy and investor planning.
Let's wade into some geopolitical speculation, shall we?
Sure.
And as we've discussed, silver recently added to the critical minerals list, vital for defense technologies, AI, semiconductors, electrification, certainly been recognized by the Trump administration as vital to the economy and national security.
Yep.
The Trump administration has designated these cartels as terrorist organizations, and there is some thinking out there that this could see the Trump administration take action within Mexico and potentially try to secure some of the silver supply, similar to what we saw in Venezuela, although a very different landscape politically in Venezuela in terms of the leadership, in terms of the rest of the country. There was a rumor, which was proved to be unsubstantiated, that President Xi said that Trump would use this as a pretext to go into Mexico and take control of this. Again, that rumor is inaccurate. I will emphasize that. But it does paint the picture of, or the framework as to how things are being seen, especially as we saw the action in Venezuela and potential interest in Greenland and the Don Roe doctrine, similar to the Monroe Doctrine of emphasizing the Western Hemisphere and securing perimeters. Do you think there could be some kind of intervention in Mexico on a more formal level?
I don't think they could really easily do it for their natural resources.
Geopolitical rumors often exaggerate the US's leverage over Mexican silver, masking real risk. As Andy Schectman points out here, cartels are now treated as terrorist organizations, but operational realities and sovereignty constraints make intervention for natural resources highly improbable. Investors should note the mismatch between headlines and policy feasibility, and historical comparisons like Venezuela show these assumptions rarely translate to action. For portfolio strategy, this means evaluating supply exposure rather than chasing sensational narratives. Next, Andy Schectman discusses the limits of intervention and its implications for silver stability.
It's one thing, and again, I'm not an expert on what has transpired over the last 50 years in Venezuela, but when you have the Western oil companies built the infrastructure and had a deal in place until Maduro took over, you have a leg to stand on. When you talk about going into a country like Mexico because of the cartel and using it as an excuse to take over their silver mines or their silver production, it seems like a stretch.
It does seem like a stretch, especially considering that they're private companies functioning effectively in Mexico. A lot of multinational big mining companies have mines in Mexico, so it's a very different...
the difference between a multinational mining company and a government. And if you are a company like First Majestic who has mines in Mexico, obviously this is on your radar. You think about it, you start to bring in some serious security, and that raises the cost. It's going to hurt probably the bottom line on their share price. All of these things come into play, but I would have a very hard time believing that this administration would go in under the guise of eradicating this terrorist group that they have now named the cartel terrorists and use it as a stepping stone to nationalize or take over their silver production.
Using cartel violence as a pretext to control silver production seems implausible. As Andy Schectman points out here, multinational miners like First Majestic already operate securely and privately in Mexico, making government intervention unnecessary and costly. Heightened security raises operational expenses and risks squeezing profit margins, directly impacting share prices. Historical parallels in Venezuela don't translate neatly, revealing the difference between state-controlled resources and private enterprise. Investors should focus on operational resilience rather than geopolitical fear. Next, Andy Schectman discusses the implications of local security dynamics on corporate profitability and silver supply risk.
That seems kind of far-fetched to me.
Yeah. Just putting it out there.
No, I mean, it's a fair point because you look at what they did, what his aspirations are in Greenland, which again is very different. The rhetoric with Canada and Venezuela, he's certainly doing things that are provocative, but that would, I think, be a little too far of a line to cross.
Right. Let's talk about the line that has been, well, I wouldn't say crossed, but established, and that is Project Vault. We've spoken about this briefly before. And just like the United States is a strategic petroleum reserve for energy emergencies, they created Project Vault, a strategic reserve for raw materials. It combines $10 billion in financing from the U.S. Export-Import Bank with roughly $2 billion in private capital to procure, store, and manage critical minerals on behalf of American industry. Now, the mainstream has been focused on critical minerals. That's where all the talk has been. But I will emphasize that the president did say that anything under that list, including silver, could qualify for Project Vault. As we said, in November, they added it to that list. Do you think that this is something that could happen, that they will be stockpiling silver specifically?
Project Vault could quietly reshape silver markets without fanfare. As Andy Schectman points out here, this strategic reserve, backed by $12 billion in combined public and private funding, allows stockpiling of critical minerals, including silver, potentially insulating US industry from supply shocks. Mainstream narratives overlook the subtle impact on domestic mining incentives and global pricing, as large deliveries may already be channeling into reserves. For investors, understanding these structural stockpiles is critical to anticipating market tightness and potential floor effects. Next, Andy Schectman talks about how Project Vault could influence silver availability and pricing signals.
I mean, if I had a gun to my head, I would say that the inordinately large deliveries between 30 and 70 million ounces every month for the last 15, 16 months is partially the U.S. government under the umbrella of the Exchange Stabilization Fund, where they, if it's national security, do not need to get congressional approval and do not need to speak about it. And again, who is pulling 38 million ounces out? Where's it going, to your point? Could it be Samsung and Sony and Tesla? Sure, it could. But could it be the national government or the Treasury Department? Absolutely, it could.
Well, let's hear from Treasury Secretary Scott Bessent. He spoke when this project was first announced. Let's play that soundbite.
Economic security is national security, and a country does not have sovereignty if we don't have control of our critical minerals, don't have control of our steel production and our industrial base. And thanks to the work of everyone here through your leadership, this was a public-private partnership that only you could have assembled, and we are taking back our sovereignty, and we are going to have this Vault project, a strategic mineral reserve, and I can't tell you how innovative and exciting this is, and the level of security it is going to give us going forward is phenomenal.
I mean, what more do you need to hear? And if you ask yourself who the hell has the power to make the CME group do this, how much further do you have to look?
Tens of millions of ounces of silver moving monthly may hide strategic government operations. As Andy Schectman points out here, the Exchange Stabilization Fund could be orchestrating withdrawals without public oversight, and corporate actors like Samsung or Tesla might only explain part of the flow. Treasury Secretary Scott Bent frames this as national security, but operational opacity masks who really benefits or controls inventory. For investors, this underscores unseen interventions, shaping supply and potential price distortion. Next, Andy Schectman discusses the broader implications for strategic reserves and market influence.
Look, there's a fine line between conspiracy and reality. And I was reading on X today, and there was a commentator saying this isn't manipulation. This is an orderly drawdown of open interest, like it always does. How can anyone call what we just saw orderly? It's not orderly. It is anything. It's far from orderly. It's chaotic, and it's overt. And yes, the CME group always finds a way to draw down open interest into the delivery month so that it does not exceed what can be delivered. Once again, they did it, but at what cost? And anyone who would claim that this is orderly, I disagree with. This is flippant. This is right in your face, and what are you going to do about it kind of thing. And that's, to me, why you see lots of metal now leaving. In fact, way more than the February deliveries can explain. So I don't know. I think that right there was very, very telling on just how plausible it would be that the gold and silver that we've seen come in since a year ago, November, in massive amounts that is being delivered to COMEX. Some doesn't leave, a lot doesn't leave, but now we see some leaving and maybe a lot leaving. So that to me would easily be one of the top choices. In fact, probably is my top choice as to who is behind this. Maybe someday we'll figure it out.
Market orderly narratives crumble under scrutiny of open interest activity. As Andy Schectman points out here, what's presented as procedural drawdowns is overtly chaotic. With more metal leaving COMEX than February, deliveries justify. This suggests hidden actors or interventions shaping real-world flows, leaving investors exposed to unseen risk. Historical delivery patterns rarely see this level of divergence, hinting at manipulation or strategic repositioning. Next, Andy Schectman shows why this chaos is central to understanding silver and gold market mechanics.
But they're telling you that it's vital to national security. What more do you need to know?
And as we know, vital for defense, and vital for AI, and vital for the economy, and vital for electrification.
Well, in that $1.5 trillion defense bill, is there anything in there for getting minerals critically? I don't know. I mean, is there anything in there for securing this stuff on behalf of, and they wouldn't be overt about it. And then you have the refineries that are, or they're talking the smelters that are being built, the refining capability. All of this stuff points to a price floor to incentivize domestic mining, a stockpile to protect national security, right. Refining and smelting to be able to produce it yourself. It's all pointing to gold and silver being far more important than the dollars that they're valued by are telling us.
Right, and that of course ties into your bigger thesis, which we will not get into right now because then we will be talking for several hours.
I won't be able to stop. That's right. Probably a good idea.
Our viewers can go back to some of those videos, but you mentioned price floors, and again, the story made news and then it kind of disappeared. And that's what happens in this news cycle. There's so much going on. That's in fact part of the Trump administration strategy, like flood the zone, like create so much news all of the time that things sort of get overlooked because there's just so much happening at the same time and forgotten about. But we are not forgetting. And you mentioned price floors.
National security messaging masks subtle market engineering. As Andy Schectman points out here, strategic stockpiles, smelters, and domestic mining incentives suggest a de facto price floor for gold and silver, often overlooked by mainstream coverage. Media cycles may obscure the scale, but structural interventions point to intentional shaping of supply and valuation. Investors need to recognize the disconnect between public headlines and real-world resource management. Next, Andy Schectman discusses how these policies could influence price floors and domestic mining incentives.
And Vice President Vance did talk about the possibility of price floors for critical minerals, and that is essentially government support to guarantee supply for national security, saying to the miners, put in the infrastructure, make the investment, and we will make sure that at the very minimum you will get paid X amount for these critical minerals. Could something like that happen with silver as well?
Why not? I mean, and it would have to in many respects, because silver is found in nature in a form called epithermal, very near the surface. The big deposits were found long ago. Only about 20% of the silver that was mined last year came from companies like First Majestic looking for silver. Most of it was byproduct mining of copper, lead, and zinc, companies that don't have incentives to look for silver. So yeah, the cost, I don't know what the all-in sustaining cost would be, but I have to venture it's much, much higher than what we see right now, or that stuff would have been mined already. So yes, it would be to incentivize the domestic industry of mining for things like silver.
Okay, and then on the surface, that sounds bullish, a price floor. But once you have government intervention, could that also mean a price ceiling?
Government guarantees may distort the silver market more than anticipated. As Andy Schectman points out here, price floors for critical minerals act as safety nets. ensuring mining infrastructure investments are paid off, but the vast majority of silver comes as a byproduct, not from targeted extraction. This implies incentives may not match the natural distribution of supply, potentially creating artificial floors or ceilings in pricing. Investors should weigh both support benefits and long-term distortions in cost structure. Next, Andy Schectman talks about how intervention could create both price floors and ceilings for silver.
And if you have government intervention that increases supply, does that bring down the price of silver? So there are two factors here. One, does price floor mean potential price ceiling? And once we have the government interfering, and does increased supply, and granted it takes years to get a silver mine going, does that increased supply bring down the price?
I mean, ultimately, when you get into price manipulation and price capping, it never ends well. It distorts the free market. And in a globalized world where there is a decreasing element that is increasing in need and demand, establishing price floors or price ceilings seems to be a temporary at best solution.
Intervening to control supply may temporarily stabilize prices, but the long-term impact is distortion. As Andy Schectman points out here, government-driven supply increases could impose artificial ceilings, undermining free market signals, while demand continues to grow globally. Price floors and ceilings might offer short-term security, but they risk misallocating capital and slowing organic exploration. Investors should consider intervention as a temporary fix, not a sustainable pricing mechanism.